is that the company has increased their revenue guidance. The revenue guidance now stands at 14 to 16%, and that compares with 13 to 15% that the company had indicated earlier. The margin guidance, however, has been retained at 21 to 23%, so that is in line with expectation. But the street will take heart from the fact that at least the margin figures are expected to jump back, and the large deal win TCV also is $1.7 billion, which is
Anisha, let's start with the guidance first. Sure. Was there any expectation that guidance would be increased or would not be increased?
No, the street was expecting that they would largely maintain the guidance. There was no talk about increasing it, given the entire, macro dynamic situation that we are in.
So what's the new guidance?
It's 14 to 16% growth. Earlier they were expecting a 13 to 15%.
So the 1% increase that they've done in Q1 is probably they're factoring in with the remaining 9 months of the month. Okay, we'll do the back-end calculation, what it means for 9 months. Can you talk about margins more? So it's come in at 20%, and the street was going in with a number of
20.8.
20.8. So it's an 80 basis point miss. I think we have Omkar with us. Omkar, did you hear out, Anisha, all the numbers? Do you want us to tell you the numbers once again?
I've just heard it.
Okay, so you can give your first take on the numbers, and if you need any numbers, let us know. We'll give you more details.
Yes, definitely. Thanks for the opportunity, and my opinion about the Infosys results are quite much in line with our expectations in terms of revenue. The margins, of course, every IT company today have facing the supply side constraint. The margins are likely to be under stress for the next couple of quarters at least, which was definitely for this quarter, it was definitely quite below than expectations. But if you can say a positive sign that they have, that they have increased the guidance, so there were less worry about the client spending from the geographies as we were mainly threatened of. Otherwise, in the revenue side, the revenue was much in line with expectations, and positive is from the deal wins, which was around 1.8, and also from the increased guidance level.
Okay, that's the first one coming in. Sandip, what about you? What do you make of the numbers? Omkar says that, are largely in line or tad bit better, but deal win pipeline of $1.7 million as well as $1.7 billion rather, and the margin profile coming a tad bit lower. And if I can just talk about the attrition number, that has come in at 28.4%. Yes, it's a bit worse off, but not really to be too worried about. Sandip, what's your first take on the numbers?
These numbers are exactly mirror image of all other large tech companies where revenues are perfectly in line or better than estimate and margins are falling. I would only like to put 2 points that investors are unnecessarily worried about margins. Let me tell you, there is one impossible equation which investors are trying to build today, that is that growth will fall and margins will fall because of attrition. It is impossible in last 22 years of my experience. I have seen that if attrition goes up, margins fall, but attrition, if industry is going up, then growth is going to be very good. And the good news is that, startup ecosystem has completely dried up in terms of recruiting. So the pressure on new hiring is going down. The only competition left for Indian IT company today in India is EPAM. Other than that, you will see attrition pulling off sharply. And remember, 1% fall in attrition will lead to 35 basis point of margin expansion. So we are looking at, at least 300 to 700 basis point margin expansion for the industry in next 2 years with attrition pulling off. So that should be looked into with the context of growth. I think this is a super cycle of technology. People are worried, and it is not like past where it was a discretionary spend. It is a revenue generating spend. So I am very positive about the numbers and the guidance update is really come as a very
right. Sandeep, the press conference is just starting. We'll come to you once again after hearing out the management.
Ohio. The US market grew at 18.4%.
Okay, so those are the key comments coming in from the management and Infosys. They maintain that the deal pipeline remains very strong. They say that margin is going to be towards lower end of the guidance, and they see a lot of levers to improve the margins from here on. They did mention that pretty much they have bottomed out at the level of around 20.1%, and going forward, optimization as well as utilization and pricing is something that remains an important lever for the margins to head higher. And also they have taken the max maximum hit of the wage hikes already, and that is not expected to be there in the coming quarters. On account of the deal wins being a tad bit lower, the management maintained that the deal wins continue to be very bunchy. The large deals continue to be very strong, and that's the reason perhaps we're seeing a tad bit of dip this quarter. But outlook-wise, they remain fairly confident, and that is quite underscored by their revenue guidance as well, which has been revised upwards. We're now joined by Sandip Agarwal again. Sandip, hi. Thank you so much for staying on. You heard the comments coming in from the management. They are sounding very bullish. Is this something which will give more, optimism to the street as well? Because there has been a bit of worry regarding whether demand environment is likely to sustain or not. Does this do enough to answer all of those questions?
I will say management is not bullish. They are still very bearish if you see their guidance. We have been maintaining that, they will end up much higher than what they are guiding. Last year also, if you see, they started with 13, 15, they ended at 20. This year cannot be different. Means I will not say it will be 19, but I would say that it cannot be 14 to 16 in my view. They are hiding a lot of growth for conservatism. My only point is that, this is the problem which we are facing today. There is hardly any industry which is monopoly where, only market in the world for supply is India. And in that industry, people are expecting an impossible equation to happen, as I mentioned earlier, that, both growth and margins will fall because of attrition. Why will attrition happen if there is no growth? So either of them has to be true. I believe whenever industry attrition has gone up in last 30 years, the growth has been superb. And with growth, the operating leverage plays out. Margins come back so strongly, it is unbelievable. I think minimum 300 to 700 basis point of margins are hiding in subcon cost and attrition today, which will reverse over next 8 quarters. And it will be a big surprise. That is what my call is.
Okay, so margins is something which is likely to surprise positively, but what about the top line? Do you expect this kind of growth momentum to continue in FY24 as well? Because now that has become the question, given the fact that this quarter the deal pipeline the TCV rather was a tad bit muted. Would you be worried about FY24, and are you looking at changing your estimates in either way?
No, see, we have not changed our estimate for any company. We continue to believe that it is a long take up cycle, which will have 13 to 15% growth for a longer term, and some of these selected mid-caps will even do 18-20%. This view remains unchanged, and only thing why we are so confident of our growth numbers is one reason that, till 5 years back, this industry was driven by only cost cutting and operational efficiencies. Today it is driven by two growth engines. One is cost efficiencies, experience and efficiency, and second biggest engine which has got added is the growth enabler. It has become growth enabler. Omni-channel is the law today in most of the retail enterprises. So there is no way, this industry will get hit as badly as any other industry, purely because, we are in a monopoly market, monopoly business. We drive demand. We are the only supplier in the world for manpower of IT services. So I feel very comfortable. And I have always been very happy. If you see last 2 years, my comments, I have always said whenever industry attrition goes up, it is the time to buy the stock, because attrition is first indicator that demand is going to be very strong.
Fair enough, that point is taken, but Sandip, what do you make of Europe as a geography? Because if you hear the likes of TCS, etc., there is a bit of indication that they're watchful of this geography, but the comments coming in from Mr. Salil Parekh, kind of give you that confidence that they're not seeing any worry. How do you see, Infosys versus the rest of the peers, and in the near term, do you expect Infosys to outperform TCS?
See, revenue growth, Infosys has been doing tad better than Infosys for quite some, Infosys is doing tad better than TCS for quite some time. And I think that will continue to happen. But you also have to remember that there is a difference in the base of both the companies. So we have to give it for that. I don't think this sector has, in this sector, one thing is very clear. It is a secular trend. Either the industry will do good growth or go up, or it will come down. So, very few exceptions are there where something happened to top management, and because of which in a good environment, one company has not done well, as we saw between 2010 to 15, where, one or two companies in large cap did not perform as well as the others performed. But otherwise, it is the industry trend. So every company will do well. TCS bigger base, you have to, adjust with 1 or 2% lower growth. But I don't think there will be any difference. As far as Europe growth is concerned, I firmly believe that, Europe will come back even strongly than US. We have seen that in 2011 to 15, till 17, that Europe was doing great despite so much of pressure, because you have to remember that one biggest driver of this industry always has been cost cutting. So if European economies come under pressure, they will obviously cut down on discretionary spend, but at the same time they will increase subcontracting because they have to manage their cost and profit and loss account.
Sandeep, in the overall scheme of things, what would you suggest viewers and investors when it comes to the entire, debate between mid-cap and large-cap IT? What would be your preference? And if you can pick up some topics from the sector as well.
See, I will tell you, in this industry, there are three stages. First stage is always there where, large cap follow the trend. So if downturn comes, large cap suffer badly. If upturn comes, large cap benefits the most. So same thing is there in their operating metrics. So today attrition is high for large caps also, you have to remember. And we are expecting large cap attrition to start falling from next quarter. So mid cap and small cap attrition will come with another 1 or 2 quarter lag. So till that time, you will not see any respite in the margin numbers for them. And, I think that is the reason that, still there is, these large caps will do better for next 3 to 6 months. And then mid cap and small caps will also catch up. I think whatever has been lost in last 4-5 months due to recession fears, 20, 30, 40% value erosion which has happened in the stock, that will come back by next March. That is what my call is.
What would be your top questions when you talk to the management tomorrow? Is there something specific that you would want to hear from the management?
I always ask only one question, attrition, because in this industry there is no plant machinery, nothing, only manpower is the cost. So if your replacement cost comes down, that is the time to make money. So we are at peak of replacement cost and attrition cost today. I think that from next quarter onwards, you will see large caps started to see pull off in the subcons and attrition cost. And then slowly, you will see a lot of positive impact coming for the whole industry. So my always one question is, I am very scared if attrition falls to, below 15% for the industry, because it indicates that the growth will be very bad going forward. But at the same time, I am very uncomfortable again when it reaches 22% for the industry, because it starts impacting my margins in a big way. So I am very comfortable between 15 to 22% of attrition. My question to the management will be when they can bring down the attrition to 20-22% level, because that will be the very sweet spot to make a lot of money in the sector.
Well, absolutely. The management did allude to the fact that at least in absolute terms, they are seeing a moderation when it comes to attrition already. And in Q1, they talked about that attrition had actually dipped, while in TTM basis, it continues to be high. We let you go on that note, Sandip. Thank you so much for joining us this Sunday evening and making sense of Infosys earnings. So that's the word coming in for Infosys. It does look like it's a decent quarter coming in. A revenue growth in terms of constant currency at 5.5% versus street expectation of 4.5 to 4.8%. Beating all the street estimates. Even if you look at the rupee revenue, that came at 34,450 crores versus an expectation of around 34,150. Yes, margin figure is below street estimates. The margins have come in at 20.1% versus what the street was expecting at 20.8%. But given the fact rest of the IT peers have also reported a miss on the margin front, I think this is something that the street was already bracing itself for. The other tad bit of negative in the number is the fact that the TCV or the deal wins in the last few quarters have been in the range of $2 to $2.5 billion. That has come down to $1.7 billion. However, the management does say that the large deals are, bumpy by nature, and this quarter perhaps something got, slipped into the next quarter, and that is why we're seeing this lumpiness when it comes to the deal pipeline. But overall, they're very confident of the demand environment. They're very confident of how Europe is shaping up and how digital revenue is also expected to scale up. On that positive note, we will wrap up our coverage of Infosys earnings. It does look like that the company has reported a decent set of numbers, and overall over the weekend, we have, kind of got decent earnings from the likes of ICICI Bank, etc. as well. So overall, the expectation is that it's going to be a green Monday, but let's see whether that happens or not. But that is a wrap on the special coverage.